CrowdStrike is by far the most requested stock on the channel. Many of you have been asking me, what do I think about CrowdStrike? It's down over 30% over the last 5 days. Absolutely insane. Is it a good buying opportunity? Is it a value trap? Is it still overvalued? What do I think about it? I'm going to do my best to analyze it here in the video, although it's hard. It's hard to analyze those growth companies trading at very high multiples, but I'm going to do my best. I'm going to tell you at what price I'm personally be interested in buying CrowdStrike, and it's much lower than $260, I have to say. Now for CrowdStrike, most of you are familiar with the outages. They were massive. Over 1,000 flights were canceled in the United States, and around 8,000 were delayed. Total around 4,400 cancellations since Friday. And Delta Airlines has suffered a lot from the CrowdStrike outages, and many different companies have also suffered. And we don't really know the legal risks with that stuff. Will CrowdStrike be sued for that stuff? Will CrowdStrike have to cover certain expenses to retain certain customers like Delta Airlines and other major customers that were affected by that stuff? So we still don't really know the legal risk with that. I would highly doubt that it's just gonna pass on and everything is fine and then like nothing has happened. I think there will be something done about it. I mean, that's what I would personally think, but I'm not a cybersecurity expert or a tech expert. I'm doing my best here in this video, but I have to say I would highly doubt that it's just gonna go like that. You have influential CEOs like Elon Musk saying he deleted CrowdStrike from all the systems. This is substantial, and it could encourage maybe other CEOs to potentially try to move away from CrowdStrike. Although it's a very sticky product, and maybe the current customers aren't going to move from CrowdStrike, but maybe new customers are gonna think twice about going with CrowdStrike, and they're gonna try to go with different competitors. Again, I'm not really sure the competitive advantage of CrowdStrike in the cybersecurity space, but I would assume there's many different competitors that could offer pretty similar services, and because of that, maybe they're gonna skip CrowdStrike and try to go to a certain or a different customer, a different competitor. That's very possible. And this is all kind of things that will affect CrowdStrike very much. What I'm trying to determine in this video is to see if the 30% down move was actually warranted, or is it maybe just an overreaction? Is the stock still fairly valued, or is it just still extremely overvalued that it could go lower? And that's what I personally believe. But this is not the only reason why CrowdStrike was actually down. The main reason why is because Jim Cramer actually recommended the stock last month, and since then it's down 30%. I'm just kidding, guys, but it's crazy. Like, I don't know how Cramer does it. Like, every time he talks about his stock, it just goes down. Like, I don't know how it works. And it was funny in the beginning, but he just done it so many times. Like, it's so consistent. It's absolutely insane. But for the last quarter, I mean, the earnings per share were amazing. Amazing beat. 95 cents versus 82 cents. Non-GAAP, of course. The company is barely profitable on a GAAP basis. Non-GAAP is still massive, 95 cents. They also did a pretty big beat on revenue, 845 versus 839. That's very good stuff for CrowdStrike. In terms of revenues, it was growing 33%, massive revenue growth. Most of the revenue is subscription-based. Subscription-based, I think, is 84 or 85% of total revenues. And subscription gross margins, it was around 78%. This is very high gross margins, GAAP gross margins for the subscription services of CrowdStrike. Most of their spend is on CapEx and other things to try to maintain a competitive advantage in such rapidly changing and important technology, especially in the world today. Cyber is very hot, and a lot of these stocks are trading at extremely high multiple, but it's mainly because the TAM is huge. For CrowdStrike, for example, they identified their TAM of pretty close to $100 billion. This is a massive TAM for CrowdStrike and for other companies. Now, if you look at CrowdStrike's valuation, it's trading at 72 times earnings, but as a company is growing around 35%. So that might not look too expensive, but 72 times earnings is still very high. But you have to keep in mind that this is non-GAAP earnings. If you look at the difference between GAAP and non-GAAP, it's absolutely insane with the company. EPS normalized, which is non-GAAP, is $3.09. EPS GAAP is 37 cents. This is massive. And it's of course due to certain expenses, but stock-based compensation is huge with CrowdStrike. Over, I think, 50 or 60% of free cash flow is from stock-based compensation. It went from 20 million to 631 million. This is massive stock-based compensation, but it's not the only one. Many different cyber stocks and solar stocks and a lot of tech kind of companies, all of them have have a lot of, stock-based compensation. But this is something we have to keep in mind. Now, for CrowdStrike, it's extremely hard to try to determine a sustainable growth rate. The analysts, they have 30% earnings per share growth, which is in line with revenue growth for non-GAAP, and GAAP is like 50%. But it's around 30% on average over the next 5 years. And I don't really like using the analyst estimates too much. But it's very hard for anyone to really have precise, exact numbers and have a lot of confidence on what exactly the growth rate is going to be and what kind of multiple CrowdStrike will be trading at. So anything we talk about in this video or any other CrowdStrike video will, in my opinion, be a gamble because it's very unknown and it's more about betting on probabilities. Now, if I look at the analyst estimates, they have $9.82 of a GAAP earnings per share by 2029, which is fiscal year 2028. So 5 years from now, they have $9.82. And if I look at the history of CrowdStrike, it has pretty much never really went below the analyst estimates, always surprised to the upside for EPS. 50% upside, 74% surprise, 28%, recently 4% surprise, 50% surprise, 10% surprise. So has always exceeded the analyst estimates. And if this trend does continue in the future, we can have a little bit more confidence in the $9.82 GAAP EPS. Again, it's not a certainty, but we're betting on probabilities that CrowdStrike since 2021 has never pretty much went below the analyst estimate. It has always surprised to the upside, and that's a very good sign. So $9.82, we take the 982, and as CrowdStrike is now growing at 30%, I would expect the growth after 5 years to slow down. So if it does slow down to 20%, for a company like CrowdStrike, a high quality company with a lot of growth and high margins in cybersecurity, which is going to be very hot for the next decade or two at least, I would put it at twice the growth. I've had success with this strategy before. It's ideal to buy a stock at the same pace as its growth. So if it's growing 20%, you buy it at 20 times earnings, but it's very hard to find, especially with shiny stocks. So I found a good balance before, valuing them twice the growth, and it has worked very well for me. So if I take the $9.82, and if we assume 5 years from now, the growth will slow down from 30% to 20%, we could take 40 times GAAP earnings for a CrowdStrike, which I believe is a fair multiple. I don't think it's expensive at all. We take 40 times earnings. This is $392 per share. The current price is $263. We divide it by 263. We're getting around 49% on the upside over the next 5 years with CrowdStrike. So for me personally, if I had to buy CrowdStrike, if I was interested in the company, I wouldn't buy much more than $200 per share. $200 per share would be the maximum I would bet on CrowdStrike, and it's still extremely unknown. It's very well, it's just unknown. I mean, it could go 40 or 50%, or maybe the growth can go to 10%, or maybe they have legal risk and they get sued and they have $5 or $10 billion lawsuit. We don't really know what's going to happen. But if I'm betting on the best case scenario or on the most realistic scenario as a beat on the analyst estimates, 40 times earnings, I'm getting $200 per share if I want to get a double over the next 5 years. So for me personally, I wouldn't pay more than $200 given the current risks that are unknown, which is a 24% decline from here. It doesn't mean the stock can't go up before that. It doesn't mean you cannot have some kind of a squeeze or whatever, or people get excited about it. But for me personally, I'm not dying to own CrowdStrike. I'm not in rush to buy the stock. I could wait for $200 and see what happens. And this is my price, $200. If it gets there, maybe I open a position. If not, I'm happy missing on the upside. I hope you guys make all the money in the world. But I just can't speculate more than that. I cannot put in 60 times earnings, and I cannot put in 30% growth forever. And this is just my assessment of CrowdStrike on very realistic numbers. I believe they're realistic. Not financial advice, and it's not a certainty. It's very tricky, but this is my opinion. Thank you for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.